The time has finally come to talk about AMD stock once again. This is a stock that longtime viewers of the channel, my earliest subscribers, you'll remember that AMD used to be like my number one or number two largest stock in my entire portfolio at times. This was a couple years ago, but I eventually sold out of AMD stock, cashed in a lot of profit on it. And more recently, the stock was actually skyrocketing through the whole global health issue and the lockdowns and all of that stuff. But after that, it actually proceeded to crash back down by over 35% from its highs. So the stock has been very volatile recently, and a lot of my viewers have been asking me to give an updated opinion on it. So that's exactly what we're going to do in today's video. I'm going to answer the question of whether or not this once high-flying stock is a buy again on this current dip, or if it's still too risky to touch even at these lower levels. Let's find out together right now. What's up everyone, my name is Ale. Welcome back to my world of stocks. Let's go ahead and start by just doing a quick little update on AMD and their business. Talk about how they've been performing, especially versus their main competitors. And we'll also talk about the stock and why it's been so volatile. Then I'll wrap up the video with my overall conclusion and let you know what I plan to do myself with this stock. Let's go ahead and jump into it here. Okay, so just a quick little background on AMD. They are a computer chips developer, so things like CPUs and GPUs that are used by computers, laptops, giant servers, and data centers, and even video game consoles like the Sony PlayStation and the Microsoft Xbox. By the way, in case you're wondering, the Nintendo Switch is actually powered by one of their two main rivals in NVIDIA. The other rival is, of course, Intel, by the way. Now, NVIDIA is a larger competitor on the GPU side of things, while Intel is a larger competitor on the CPU side of things. And up until the last few years, both of those companies were really dominating over AMD in terms of both quality and performance, as well as overall market share. However, things really started to turn around for AMD when they released a slew of new products with amazing performance and lower price points than their competitors. And this was very compelling to consumers and to businesses, and so they started adopting AMD's products. Now, these products, they include, for example, their Ryzen CPUs and APUs, which they design mostly for your average consumer PCs and laptops, as well as commercial ones for business use. Then you've got their newer Radeon Navi GPUs, which are mostly designed for gaming and other high performance graphical work, and that's used on various different devices. Of course, GPUs, that's graphical type of work that you're going to be using GPUs for. And then they've got their super powerful Epic CPUs, which they designed specifically for the massive data center market, as well as their Instinct GPUs for that same data center market. And speaking of markets, these new AMD chips are being used in supercomputing, cloud computing, gaming, 5G, communications infrastructure, artificial intelligence, the Internet of Things, autonomous driving, simulations, edge computing, and many other areas. These are very, very large, high growth markets. We'll talk a little bit more about that later in the video. But the result of all of this innovation for AMD has been that they've been able to steal a lot of market share back from their rivals ever since they started releasing these. In fact, they just recently reached a new all-time high in CPU market share after stealing a ton of it from Intel. Here's a chart of the last 5 or so years for them. And you can see AMD just climbing the ranks there, especially in the mobile, client, and server markets. Even desktop managed to grow by several percentage points despite having the lowest growth. But still, obviously, the point is that Intel and NVIDIA are still at the top of the charts with these market share percentages. I'm going to show you some more in a second, but the reason why is because most hardcore gamers and PC users, they're still going to generally prefer Intel for the usually better performance and power, myself included, but AMD is doing a much better job of competing there, and even on super heavy workloads like with their Ryzen Threadripper line, that's been very compelling to a lot of people as well. Now on the discrete GPU side of things, basically the individual GPU cards, it's been much more up and down against NVIDIA, but overall AMD has done a great job in recent years of at least becoming a larger competitor by capturing about a fifth of the market, even though NVIDIA still dominates it. Plus, though, when you include all types of GPUs, like the ones that are combined with CPUs or the ones that are prepackaged inside of computers, well, AMD actually ships out close to the same amount of GPUs as NVIDIA, believe it or not. Although Intel is still top dog there with their integrated GPUs at around 60% of the market, and NVIDIA and AMD basically split the remaining 40%. But that's because Intel combines their weaker GPUs with their CPUs, puts them together into computers, and people generally buy those, and that's why they have so much market share. But no matter how you look at all of these different figures, all the information I'm throwing at you, the point is that AMD has been doing a great job of finally innovating their way back into at least competing with these giant, larger competitors. And that's a lot of it has been under the leadership of what I think is one of the best CEOs in the world in Lisa Su. And the result is that their financials, along with the stock price, have dramatically gone up, right along with, market share gains and things like that. As you can see here, sales really exploded in 2020 and 2021, in large part. To be fair, that was because of the lockdowns, which sent demand for computers and laptops and computer related parts, sent demand for that all through the roof due to the rise of remote work and remote learning and all those kinds of things. People generally staying home, being on their computers more, stuff like that. But even here in 2022, with most of the economy already being opened back up, sales are still growing by 60%, which is even higher than the growth that they did in 2020. That's pretty crazy. So this is really a company that is firing on all cylinders, because even after the unbelievable growth of 2020, 2021, and 2022, they're still expected to somehow pull off double-digit growth in 2023. And the only reason it's that low in the first place, I would say, is just because they have to cool off a little at some point from all the gains. And there's also chip shortages and other reasons, but really, I think one of the biggest reasons is because they've seen such gigantic growth every year that, at some point you gotta cool back down, let it all reset, and then you can start to sustain another decent sized wave of growth. It kind of comes in cycles sometimes with these companies. And yet their profits, though, they're still expected to grow by huge amounts over the next 5 years. If you look at their EPS, otherwise known as earnings per share, well, it grew by a gigantic 40% on average over the previous 5 years. And hey, it's still expected to do very similar numbers over the next 5 years as well. Growth of about 33% on average every year. That is very high growth. As a result, the stock absolutely skyrocketed. I mean, this is a stock that I remember at one point it was trading for like just a couple dollars, but it later climbed all the way up to more than 160. Those are insane gains for anyone that held on to the stock that long. Now, with that said, though, the stock did eventually peak in 2021 and has mostly been crashing ever since, as the stock is now down over 35% from those highs, and it currently sits right around $100. That's still, obviously way higher than where it was just, 5 years ago or so, but it has been coming down a lot recently. Anyway, the reasons for the crash or the drop, whatever you want to call it, I would say that the reasons are actually pretty simple. For one, tech stocks in general were in a bit of a bubble following the global health crisis and the associated lockdowns, so they really needed to come back down to reality. For example, the tech-heavy NASDAQ index, it is currently in a bear market after losing more than a fifth of its value, and yet it's still up close to 100% in the past 5 years. So that kind of gives you an idea of just how expensive everything got and how these tech stocks were trading at unbelievably high levels before finally now starting to come back down to reality. In AMD's case, more specifically though, I mean, they've always been a super expensive stock from a profit standpoint, usually trading for a PE ratio, price to earnings ratio, that was in the hundreds. But today it's fallen down to less than 40, which is obviously much more reasonable. Don't get me wrong though, a PE of 40 is still pretty high, and you especially see the expensiveness of this stock, the priciness of this stock. If you look at their price to sales ratio, which used to be at only around 1 or 2, that's generally considered really good for a PS ratio, but then it climbed to almost 15, and now it's fallen back down to 7 where they sit today. But even 7 is still kind of expensive, especially if their growth starts to slow down right now. And we know that at least will happen to some degree in the short term. But to give you some more comparisons here, let's look at AMD's forward P ratio compared to some giant behemoth tech companies like Microsoft, Google, Facebook, companies that people love to own their stocks in. Well, AMD's forward P ratio is actually higher than all of those. despite those being much safer, overall better companies to invest in long term, at least in my opinion. Anyway, the thing about AMD though is that their earnings growth is really high. So that kind of makes up for it a little bit. When you convert their valuation over to a price to earnings to growth ratio, which is generally considered a good value at around 1 or less, well, then AMD stock actually starts to look, somewhat good. It gets cheaper than both Microsoft and Facebook, although it's still higher than Google, but that's a rare exception right there because Google is trading at some of the lowest prices I've ever seen. I mean, this is an absolute steal at these prices, if you ask me. I've talked about it in several videos. I think Google is super cheap right now. But anyway, let's give it a more fair comparison. Let's put AMD up against their actual sector and some of their main rivals like Intel and NVIDIA. And here we can see actually still a fairly similar story. AMD's P/E ratio is around 50 to 70% more expensive than the sector on a trailing basis, but starts to get a lot better when you factor in future growth, because their forward P/E ratio is about 30% more expensive, still high, but less. And then their adjusted forward PEG ratio, the price earnings to growth ratio, is actually more than 50% cheaper than the sector. That's pretty interesting. And the same pretty much goes for when you put them up against Intel and NVIDIA. Not only is AMD's PEG ratio like half of NVIDIA and Intel's, but NVIDIA is even more expensive on just a PE ratio basis too. Although to be fair, Intel is dramatically lower than both of those, but that's also because Intel stock is less popular right now, given that they've lost so much market share and they've been kind of struggling to keep up with the growth of the much smaller companies in AMD and NVIDIA that have been able to take more market share. For example, Intel did close to $80 billion in sales last year, while NVIDIA and AMD only did less than 30 and 20 billion respectively. But Intel's revenue growth is expected to be about flat this year, while NVIDIA is growing at 25% and AMD is even higher at 60%. So Intel is basically this giant behemoth with a lot of market share, but they're struggling to grow while the smaller NVIDIA and AMD are, starting to climb the ranks. Anyway, the story here, I would say, is all about growth with AMD. You're paying a premium price for that growth, which in my opinion will still be there over the long term. Because right now, AMD is generating a ton of sales in gigantic markets like gaming, AI, and the data center, yet its market share there is still much lower than their competitors, which leaves plenty of room for expansion. Again, AMD's revenue last year was less than 20 billion, yet their total addressable market is estimated to be worth over 130 billion. And the largest chunk of that is coming from the data center, which AMD has done a fantastic job of competing more heavily in, with their server market share only being around 10% right now, but it's expected to grow massively by Bank of America analysts to as much as 35% in the coming years. So considering that the stock is down right now, but the company is growing at a fast rate, which is lowering the valuation too over time, I think the price is getting more and more attractive the more that the stock falls. However, I think the same thing can be said about Intel and NVIDIA as well. Intel stock is beaten down to the point where they're only up less than 20% over the past 5 years, leaving the valuation very low and their dividend yield very high at over 3% with a tiny payout ratio. That's very attractive. And the reason why that payout ratio is so low is because they generate a ton of cash, which they not only use to pay the dividend, but they also use it to invest super heavy into research and development. That's something that AMD struggles to match with their size. In fact, last year, AMD only spent less than $3 billion on research and development, while Intel spent more than 5 times that amount at over $15 billion. And the reason why that matters is because Intel is actually now entering the discrete GPU market as well, which was previously held as basically a duopoly between AMD and NVIDIA. But when you look at market share, Intel has already stolen about 5% market share directly from both of them. And then you have NVIDIA, which is a stock that I actually own myself already. It's the only one out of the 3 that I actually own. And the reason why I love NVIDIA so much is because they feel like the perfect balance of dominance that you would typically get from Intel, but with still plenty of high growth that you would typically get from AMD. Because NVIDIA already dominates the discrete GPU market for both PCs and the data center, and yet they still have a ton of room to expand as well, just like they're doing in the CPU data center market, which has long been a duopoly for just Intel and AMD. But NVIDIA recently launched their new Grace CPU superchip back in April, which they claim to be significantly faster than the competition, at least that's what they claim, and that one goes on sale for that specific market next year, and so it's probably going to be a big deal. And part of the reason why they've been able to do this in the first place, enter this market that was a duopoly for Intel and AMD, is because NVIDIA actually spends more money on research and development than both Intel and AMD combined. That's pretty crazy. And while the stock is a bit more expensive than AMD on a valuation basis, it's at least going through a huge dip right now too, after crashing by close to half its value in recent months, which is a even bigger drop than what AMD saw. And it's currently sitting near the bottom of its 52-week range as well. And yet, I actually think NVIDIA's GPUs will continue to be trusted more in supercomputing, gaming, artificial intelligence, autonomous driving, robotics, the data center, all of which are going to be massive markets in the future. And I think the reason why NVIDIA will do such a good job of performing there is because of how much they spend on that R&D. And speaking of massive markets, I think one of the most slept on behemoth of a future market is the rise of smart cities. I feel like people are not talking about that enough, and those rely very heavily on high performance video capture and data analytics, and that's like NVIDIA's specialty. So I think NVIDIA is going to be, at least they have a very real shot of being the market leader there as they continue to build on their already existing Metropolis platform for that market. So all of that is part of the reason why I've invested in NVIDIA over something like AMD and Intel. But again, all of these stocks really have their pros and cons. They all have certain benefits over the others. So I think it just really depends on what type of investor you are, or maybe what you're looking for specifically to fit into your own portfolio right now. Because with AMD, obviously you'll get a lot of growth. Then with Intel, you'll probably get more dominance, maybe some more stability, better valuation. You're also looking at a super nice dividend on top of all of that. And then you have something like NVIDIA, which I feel is very much kind of in the middle. It's a very dominant player, just like Intel, but they also have a ton of growth, just like AMD. And they're really keeping their business very exciting in terms of what they're doing and what they plan to do over the distant long term. So I feel like NVIDIA, because it is a little bit of everything, I feel that it's generally the easier stock to invest in out of the three. In fact, I kind of feel like by owning NVIDIA, I kind of own all three of them just because NVIDIA does have a little bit of everything. But hey, that's just my opinion. That's the reason why I own NVIDIA. I don't really feel like I need more exposure to these markets. I feel that NVIDIA gives me enough exposure to them. So I don't plan on buying any AMD stock or Intel, but hey, both of those are attractive for their own reasons. AMD, a growth stock that has been getting destroyed. If it continues to fall, yeah, it's going to be high up on my watch list. And then you've got Intel. Hey, if that continues to fall, that dividend is already super attractive. I would kind of like to own Intel just for the dividend alone. And obviously the other things that they're doing, but the dividend is very attractive. So yes, AMD and Intel will be high up on my watch list. I'll continue to watch them. If they fall a lot more, I may consider buying. But as of right now, NVIDIA gives me everything that I feel I need, and so I just don't think I'll be making any moves other than just continuing to hold on to my NVIDIA position long term. But again, those are just my feelings. What do you guys think? Do you own any of these three stocks? Are you thinking about owning any of them? I would love to hear your thoughts and opinions down below. I know people have very strong opinions on each one. There's diehard NVIDIA fans, diehard Intel fans, diehard AMD fans. I'd love to hear from all of you. Let me know down below. I'll try to respond to as many comments as I can. Thank you for stopping by. Hit the like button if you did enjoy it, and I will catch you in the next video. Thanks again. Take care. Bye-bye.